Let's be honest, taking a life insurance policy in Canada can feel overwhelming. Term, whole, universal, do you choose what's cheapest now, or what works best long-term? How much coverage do you actually need? And what if your situation changes? So today, let's break it down. Here are the key things to consider when choosing the right life insurance policy as a Canadian for your Canadian life. First, ask yourself, what do I need this policy to do? Is it to replace your income if something happens to you? Pay off a mortgage? Cover your children's education? Or maybe it's to cover final expenses or leave a legacy behind. Your reason will shape everything from the coverage amount to the type of policy you choose. Next, understand the two main types of life insurance available in Canada. Term life is temporary. You buy it for a set period, 10, 20, 30 years, and it covers you during that time. It's affordable and great if you're protecting specific obligations, like raising kids or paying off a loan. But once the term ends, so does your coverage, or it renews at a much higher cost. Permanent life insurance, on the other hand, covers you for your entire life and includes types like whole life and universal life. These policies also have a cash value component that grows over time, tax-deferred. They're more expensive, but they offer stability, long-term planning tools, and tax-efficient estate benefits. If you're young and healthy, starting early with permanent coverage can lock in lifelong protection at lower rates. Third, know how much coverage you actually need. Here's a basic way to estimate. Take your income, multiply it by 10 to 15, then add any debts you want paid off, like your mortgage, and future obligations, like your child's tuition or a surviving spouse's retirement. Then subtract any existing coverage you already have, through work or another policy. The result gives you a baseline. Remember, life insurance isn't just about death. It's about leaving behind stability. Fourth, factor in your budget. It's easy to overestimate what you can afford. But it's smarter to start with a policy you can comfortably sustain for the long haul. A smaller permanent policy is better than a large one you cancel after 2 years. With term, premiums are lower, but they increase dramatically when you renew. With permanent, premiums are higher upfront, but they stay level for life, and some policies can even be paid up early. Ask yourself, do I want predictability, or am I okay with revisiting this in 10 or 20 years? Fifth, consider your health and eligibility. In Canada, most life insurance policies require a medical exam or health questionnaire. The better your health, the better your rates. But if you've had past issues or want to skip the medical process, you can look into simplified or guaranteed issue policies. These come with limitations like lower coverage or waiting periods, but they're great options for people who might not qualify otherwise. So be honest about your health up front. It helps you find the best fit faster. Sixth, understand policy features and flexibility. Some policies let you add riders like coverage for a spouse or child, disability waivers, or critical illness protection. Others let you increase coverage over time without new medical exams. Some offer return of premium if you outlive the policy. And permanent policies come with more tools. You can borrow against them, withdraw from cash value, or even use them for tax planning. Don't just look at the death benefit. Ask, what else can this policy do for me while I'm living? Seventh, make sure you're buying from a reputable insurer. Canada has strict regulations for life insurance companies, but you still want to work with a licensed advisor or broker who represents multiple providers. This ensures you're getting a full picture, not just a sales pitch. A good advisor will help you compare quotes, explain fine print, and match your needs to the right product, not just the popular one. Finally, review your policy regularly. Your life changes. Your insurance should too. Got married, bought a house, had a child, started a business. Check in every year or two to make sure your policy still fits your life. Life insurance isn't just a product. It's a plan. And when you choose the right one, it brings peace of mind, not just for you, but for everyone you love. So take your time. Ask questions. Talk to someone who knows the Canadian market inside and out. And remember, the best policy isn't always the biggest. It's the one that's still there when your family needs it most.